if you guys don't mind, and then I will share and we can go into the presentation.
Okay, are you going to put it up on the screen? Yeah, there we go. So just go to the next page. You know, my history was grew up as a New Yorker. My dad was a lawyer in New York. And I ended up going to Duke University. Spent 2 years there, and I was just getting a little itchy. And at this time, this would have been, gosh, 1977 or something like that. I did a year abroad in Ireland and at Trinity College in Dublin. This was sort of before this was very popular, and the way things happen in life are amazing. I was playing golf with someone during the second half of my sophomore year, and it was a friend of my dad from London, and he was just asking me, how are you doing? And I said, I'm getting a little bored. He said, well, why don't you, what do you think about it? I said, well, I'm thinking about going, maybe abroad for a year. And he said, do you want to go to Trinity College in Dublin? And I'd never been in Ireland. I'm maybe a third Irish or something like that, but it was, and he just said, look, if you want to go, my best friend is dean of students. So I actually got accepted without applying for doing a junior year at Trinity College in Dublin. I think it was one of the really good experiences I did because it put me way out of my comfort zone. I went from a fraternity life where you know everybody and you're hanging out with the same people every day to going to Dublin where I didn't know a soul and I'd never been there. And I'll never forget, taking the bus into Dublin my first day. I think it was like the school starts late there. It was like October 1st. And I sort of went, what the hell did I just do? But it turned out the Irish are great. 3 weeks later, I was, had lots of friends, and it was fantastic. It was also good because I had to go to a country of short, slow, white people in order to be able to play basketball. So I played on the basketball team there, and I actually coached the ladies basketball team. So it was a great experience, fantastic. So I came back, finished up at Duke, and I was on my way to law school, which my dad wanted me to do. And at literally the last minute, I decided that's it. I don't want to spend the next 7 years in a library, and I went back to Trinity to do an MBA. My dad was not happy. I had to go borrow money to do it, but I went back. And to be honest, the MBA programs in Europe at this time this one was not very good. It was only like 20 students, but it did what it was supposed to do. It got me a job. CRH was based in Dublin. Is one of the biggest companies in Ireland. I got a job, and they shipped me from Dublin. I spent about 6 months in Dublin, and then I went to Ogden, Utah, where CRH had just bought their first company. It was a pipe and precast company based in Ogden, and I was the only non-LDS person in the office. So I went from a place where it was very easy to find someone to go get a beer with in Dublin to a place where you really had to search for someone. It was a very different culture, but I loved it. They're great people. And I spent a couple of years just doing financial analysis, getting to know the business a little bit. And then I moved from Ogden. I was in Denver for a while. Then I was in LA, which strangely enough, CRH as an Irish company there at the time, their US headquarters were in LA. And I spent about a year in LA. And then they sent me down to Katy, Texas to build a roof tile plant. Concrete roof tile. I'm sure, especially if you've been in Florida or whatever, it's those Spanish-looking tiles. They can also make them look like shakes. And that was a fantastic experience because it was basically, here's an American Express card, go build a plant. And very little support. I was on my own. I had to, we built it. We did. It was a great experience to build a team from scratch. But also, it taught me a lot about the cycle in our business. I moved out. See, we built it. I think we were running in '84 and '85. In '85, the price of oil in Houston, the price of oil went from down to like $4, and housing starts in Houston went from about 50,000 to 5,000, and it was, we went from 3 shifts, 60 employees to 12 employees, and I was loading trucks. So it was a great experience to be out on your own and build something and create a team. I'm still friends with a few of the people that I worked with there. It was just a great experience. In '86, I moved up to Albany, New York, and was a VP development and did, basically just worked on deals, worked on acquisitions. And then and Oldcastle had a great, and CRH, Oldcastle's the U.S., was the U.S. name for CRH. They had this culture, which we'll talk about a little later, this culture of just calling on private companies. And we'll talk about it a little bit later, but it was really unique. And, it's still something that we have carried forward into Summit. So in '92, I moved over to run the materials business, materials being, aggregates, asphalt, ready mix, paving. We weren't in the cement business, but we always looked at that as a materials business. In '92, it was doing about $100 million in revenue. When I left that job in '06, we were doing about $7 billion. We did almost 200 deals. You just couldn't have more fun than that time period. We were building a business. We were, teaming up with great businesses, lots of interesting entrepreneurial people. But in '06, I took over all of Oldcastle, which was a big business. It was $15 billion in revenue and had about 50,000 employees. And then in '08, I lost out. I thought I was going to get the CEO job in Dublin, and literally, had picked out a house, and my family was ready to move and everything else, and I ended up not getting the job, which, I must say was very devastating at the time, but it turned out to be the best thing that ever happened to me. And I always love the quote, look, one door closes, another one opens. And, it opened with a buddy of mine who was in the private equity world in '09 when we founded Summit Materials. And, we'll get into that in a little bit. Maybe, Amanda, if you could go to the next slide. We covered some of this. I mean, you see where I went to school, and, I think this is something to really focus on is, find a good person in your business, and you don't have to have them as a formal mentor. You can have informal mentors, but people that you're close to. Both Don Gottson, who basically founded Oldcastle back in the late '70s, and he hired me in Dublin in 1980, and then also Jack Hayes, who was CFO of CRH. Both of these guys were really my mentors, and they were friends. I talked to Don the other day. They're sort of in their mid 80s now, but they're early 80s, and they're matter of fact, Jack Hayes was best man at my wedding, and they were just both wonderful people, tough, very tough, and I learned hard lessons from each of them. Don was a guy who really thought the most important thing was humility, and that you treat everybody in a company equally. And that was really an important lesson for me. And I watched him, if someone wasn't treating the person at the front desk with the same amount of respect that he was getting. I watched him get rid of a couple of people because they couldn't do that. And so he was a great guy for also, he believed in managing by influence. This is also sort of, I think, a really important concept. And he would say to you, he said, look, if you have to tell somebody what to do, you've failed. And look, you're gonna fail, and you're probably gonna fail a fair amount. So you're gonna have to tell people what to do, but recognize when you do it that you did something wrong also, because you should be able to influence people to do the right thing without having to tell them what to do. And Jack Hayes was, well, like I say, a great friend. He and I traveled around the company, which we'll talk about in a second, talking to people. And one of the things he taught me really early, this was one of the first trips we made where we were calling on some of these private companies. And, we went into this person's office and, I thought we had a great meeting, and we're leaving. We're walking down the hallway, and he turns to me and he says, Tom, would you ever shut the F up? He says, you learn nothing when you're talking. He said, you've got to learn to listen and not talk. Because my natural instinct is to fill any void in a conversation with my voice. And that's the mistake. And he said, when there's an awkward silence and you don't jump in with your voice, that's when you learn things. That's when people say things they didn't necessarily want to say. So it was an important lesson. I think seizing opportunities, and Don also used to tell me, he said, look, I love volunteers. Volunteer for that next job, and don't be afraid of someone saying no. So, volunteer, and if the guy says, I don't think that's right, that's okay. Volunteer for the next one. I think, being able to volunteer, I think people, and everybody that I know sort of love that. So, it's look for opportunities. I look back on my career and I think, going to Ireland was seizing an opportunity, going to Houston to build a roof tile plant, doing Oldcastle materials, then doing Summit materials, all of those were seizing opportunities. And I think it's been fun. I think relationship development is the other one. This idea, and I'm so old that when we used to go do these acquisition visits, normally we'd have one appointment in a town. You'd go to Wichita and you'd have an appointment with the Cornejos, say. And but then, what I did, because this was pre-cell phone, pre-anything else, is I would actually pull out the yellow pages. And probably a lot of you have never seen yellow pages, but that's you'd pull it out and you'd look under ready-mix concrete or aggregates or whatever, and you'd just make phone calls and go see people. And it was a way that you build this Rolodex of relationships. And, you say, look, we know you're not for sale, but, I just want to tell you about myself and about Oldcastle and CRH. And, if there's ever anything we can work together on, or anything that we can, work on, calls. And so many of the deals that we've done that we did at Oldcastle and that we've did at Summit, came from those relationships. I knew the Hinkles for 20 years. I knew Ab Boxley for 25 years. I knew Jason Kilgore out west. I actually bought his stepfather's business, Val Staker's business, in 1996. And, and Val Staker, who we bought in 1996, at Oldcastle, was someone that I called on. I got it. My first visit with him, I called our IT person and said, give me a list of people that our IT provider, has in our industry. So, and I use that as an excuse for the first one. Hey, I want to come talk to you about Bid Tech or whatever. I can't remember, Viewpoint, whatever it was called at the time. And, struck up a relationship with him, called on him probably a dozen times. And to be honest, I was using, it was some Friday, and I said, I think I want to go skiing. So I'll go see Val on Friday for lunch. And totally by surprise, he said, "Hey, I think I'm ready." And that was the first Oldcastle business west of the Mississippi, and we teamed up with him. So it was a matter of building this Rolodex, building relationships. So when someone woke up and said, "Hey, I want to sell my business," they would call me instead of Morgan Stanley or Citibank or whatever to sell a business. And a lot, I'd say 2/3 of our businesses in Summit have come out of that. So just relationships. So, mentors, relationships. Don't be shy about, volunteering for opportunities. Those, I think, are really interesting lessons. And Amanda, maybe we could go to the next one. Summit has been a blast. I just can't, it's had its ups and downs. But, we started in 2009. We were very fortunate to team up with Blackstone, the $500 billion private equity firm. And again, it's amazing the way things happen. I'm not sure. I guess this is seizing an opportunity, but we were originally trying to raise $100 million max. What we figured we could raise. It was 2009. The world had ended. The financial crisis came in, and the only people with any money were family offices and private equity. And so we were in New York. We were calling on a whole bunch of small to medium-sized private equity firms, and we literally had a free afternoon. And I said, "Hey, let's go talk to Neil Simpkins at Blackstone." And I had worked with Neil on a couple of mega deals when I was at Oldcastle. Multi-billion-dollar deals that never went anywhere, but at least I knew him. He took, literally, we took the meeting on a Thursday. Nice meeting. All we had was like a 10-page PowerPoint describing what we were trying to do. And he gave me a call on Friday, and he said, "Hey, why don't you come in on Tuesday and present your idea to our entire team?" We did that, had a really good meeting. And on Friday, we had a term sheet for $750 million worth of equity. So we were off to the races. We had we had a relationship with Rod Hamm. I don't think he ever dreamed that we could get the money to do the deal, but we did with Blackstone's backing. 2010 was a big deal. 10 and 11. We did like 19 deals, and we got a little bit far out over our skis. And we actually, if I was looking back on, I was going to do it again, which I'm not going to. But I would have hired many more IT people, a lot more development people, because we got so big so fast that we just couldn't keep track of what we had. And we got in 2012. We thought the market was going to get better, and it didn't. And so we were sort of stuck. And I had some very unpleasant meetings with Steve Schwartzman at Blackstone, but they hung in there, and we really got our act together. And we really, I think, reset the entire business. We caught up on our IT and our back office, and we had our first President's Forum in 2013. And I think what was really important for us was that we had a very small central office. We really believed this is a local business, but we weren't listening as much as we should to the opcos, to the operating companies, and where they needed help and how they needed help. So it was, we survived in 2013, 14, and 15. We were off to the races. And one of the things that we really liked about Blackstone as an investor, a lot of private equity firms like to do a few deals, wrap it up, and then sell it to Oldcastle or sell it to someone else. What they wanted, what they do is they use the public markets to get their money back. We went public in 2015, and that was a blast. It's 2 weeks on the road, from 5 in the morning till 8 at night. You have you fly around the country. You meet with 8 different people in each city. You have a call with Europe in the morning. You have lunch with 40 people, and it's high pressure because actually, and this I never really understood this, but when you go do an IPO, if you fail, like 85% of the companies never end up being public companies. So you sort of got to get it done or else. And it went really well. And like I say, standing up on that die with my wife and 2 kids and senior management team of the New York Stock Exchange was about as much fun as you can have. So we kept going. 17 was a great year, and then in 18 we hit another speed bump. Blackstone had exited at the end of 16. Blackstone stayed on the board till the end of 18, and I'll be honest, I miss them. They're tough, but boy are they smart, and they are the smartest people I've ever run across, and they look for opportunities, and they were just fantastic. But 18 was rough. We had incredibly bad weather, really from the end of 17 all the way through the end of 18. We missed our budget by something like 20% in 2018, which is pretty unprecedented. But so much of it was weather. Probably 80% of the shortfall was weather. So we sort of had to dust ourselves off, and 2019 was good. And then we get into this year, and we come in with great backlogs. We think we're going to have a really great year. And I must say, when I think about risks in our business, a global pandemic never sort of entered my list of major risk areas for Summit Materials, but here we are. And I couldn't be any more proud of Summit, the way we've operated in this pandemic. We've stayed safe. We've had great safety protocols. I actually think it's made us better because it's made us more focused on safety, and safety is such a core principle of Summit. I mean, the 2 things, when I think of core principles at Summit, I always think of safety as number 1. And then I always think of a second one is really important, is that, look, we need to embody humility. I think the most dangerous thing in business is arrogance. You can be confident, but don't be arrogant, because when you're arrogant, you don't listen. So that's, I think, an important thing. So look, 2020, I'm amazed how well we're doing. We're actually pretty well ahead of last year. And that's with real tough markets in Kentucky, and our cement business is also having a pretty rough year. But Amanda, you might go to the next one. So here's you can see where we sort of fell short in 2018. Midway through 2020, we're well ahead of the 2019 numbers. I think we'll fall back in the second half just because we had some pretty exceptional once-off items last year in the second half. But we really are having a great year given a pandemic has that. It's still hard to believe that you can say that. So, and just, EBITDA is what we live and breathe. It's earnings before interest, tax, depreciation, and amortization. So it's really a cash profit before any depreciation or amortization, and before any interest on the debt you have. Next slide, maybe, Amanda. So, I think we've really built, a fantastic business. And you can see on the left, we have these platforms. I've been a real believer in 2 real things. This is a local business. You need to keep as much of the decision-making local as you can. Some of our competitors, which are great businesses, by the way, and run well, but they run it much more centrally. They set prices, they do purchasing, they do everything, and the operators out in the field have much less authority. We're a great believer in keeping the decision making local. We've built a a pretty significant aggregates business. I think this year we may be up towards 60 million tons. We've got a great cement business, with 2 plants in the upper Mississippi, one in Davenport, Iowa, and the other one in Hannibal, Missouri. And we have a series of, I think, I can't remember, 8 or 9, 10 terminals that go from Minneapolis down to New Orleans. So we got a really great business. And in our products business, we're 5 to 6 million tons of ready mix and 5 to 6 million tons of asphalt. And we also, our services business, includes a couple miscellaneous things. We've got a block business and a landfill business in there, but basically it's paving. That's really our services business. So keep it local. And I'm a believer in the vertical part of our business. That when you look at that map, outside 4 or 5 states in the Southeast, the rest of the country is vertically integrated. So, we get a lot of inquiries. Well, why don't you just be in the aggregates business? Well, if you want to grow and you want to do acquisitions, you can't. You really have to be the vertical. So you can get great aggregates, but in places like Salt Lake and Kansas, Missouri, you do need to be vertically integrated. Houston, for instance, we've got a tremendous aggregates business there, but you really have to be in the ready mix business there to be successful in the sand and gravel business. You can see us. You can see on the right, we're roughly a third residential, non-residential, and highways. And you can see our biggest states are Texas, Kansas, and Utah. So next slide, Amanda. I think this is really the core. This is a slide that Blackstone gave us and really believe that, if you look at decentralized and interdependent and independence. When I started buying businesses in the early 90s, sort of the motto there was, just buy them right and leave them alone and don't screw them up. That was really the motto. So it was very much independent, which is the bottom part of that graph, and it would also be decentralized. As the 90s went on and we got into the 2000s, things started getting more expensive, and it really became apparent that we had to create value within our businesses. So in other words, if we have these independent businesses out there and they're totally independent, you really can't create a lot of value. So you need to get the benefits of scale. And, if you look at that chart, so we're always trying to go to the upper right quadrant where we remain decentralized, but we're interdependent. And interdependent is really what we're talking about here. We got people from all across our business, and interdependent is best practice. It's purchasing right. It's we have performance teams that help on the aggregate and pricing. I think we have a very disciplined pricing model that we use, and it's something that we came up as an entire group. It's Samsara and our mobile equipment. That's very hard to do as an independent business, but we get that across the group, and it's really invaluable. So it's that whole idea of keeping decision making local, which I think is essential in this ultimately very local business. But it also means that we have to be cognizant of benefits of scale. And a lot of the benefits of scale come out of better data. I think our IT systems are good, but I think they need to get better, because if you have good data, like for instance, I think we have really good data on our aggregate production costs, our subtotal variable costs. And we know that, and because we measure it, and we measure it, a lot, I think it gets better. If you don't, and the hard part is that you have to be 100% consistent in the way you keep the data. So, and that is really difficult. I mean, it doesn't sound difficult, but I can tell you it's extremely difficult to make sure that everybody measures things the same way. And it's even more difficult in aggregates because it's not like you're making widgets in a factory and it doesn't matter if you're in Mexico or the US or China or whatever, you're just making widgets. You know, every aggregate location is different. The geology is different. Everything's just different. And the size and scale is different. But what it is because we keep track of things, you know, the object is to improve. Like the quarry that has gone from $7 a ton to $6 a ton is probably doing a better job than the one that went from $4 to up to $4.25. So it's a matter of continuous improvement. But it's so important that we get the right data across all of our businesses. I think this is a really important point that, you know, yeah, we're decentralized. Yes, decisions are local, but look, we need to make sure that we are interdependent and create the benefits of scale. Amanda, next slide. So it's this whole idea of local, and you know Boxley Company, which I think we have a couple of people on here. I have never understood. You know, AB is the 4th generation, I think, leader of the Boxley companies, and you know they have literally multi-generational relationships with customers, regulators, politicians, everything that is important in our business. And I've never understood why someone would buy something like Boxley and change the name. That's just, I think, just a huge value destruction. So, you know, it's that value, but the object is to try to, you know, team up, make it better through best practice. And there's a whole lot of things where we think we can make it, you know, help. And I think we have. Boxley's a great company. You can see the other businesses there. And although there's 12 local platforms, even, you know, take a look at Kilgore. You know, Kilgore, I don't know, I think there's 11 businesses inside Kilgore that have their own identity, whether it's Altaview, Elam Construction in Colorado, or whether it's Sierra Ready Mix in Las Vegas. So it's not just 12 local businesses. I've added, it's probably closer to 30 local businesses and that have their own identity. So it's and our cement business is a little different. You know, our aggregates only ship 40 or 50. Cement is more of a regional business. You know, we supply pretty much the whole middle part of the country on, you know, 150 miles on each side of the Mississippi River. So it is more regional, but it's I don't think it's national and I don't think it's international. It's still a relatively local, you know, local business. Next slide, Amanda. I can't remember where we end here. You know, and again, this is a slide that I really like, because when we had our tough year in 2012 and we sort of reset the business in 13, we very much tried to flip the organization chart upside down, because really Summit as a headquarters and as the central part of the business is we really look at ourselves as a service center for the operating companies. The operating companies are where we make money, and they're the ones that, you know, we don't make any money in Denver. Where it's made is out in the field, and I think that's really important. But where we're trying to help, and these are performance teams, you know, in purchasing, aggregates, pricing, equipment, you know, we're eventually, we still have a long way to go on our performance teams. I think we've done a great job. I don't know if many of you have run across Anya, who runs those. She does a marvelous job. You know, we still, you know, things like trucking, things like asphalt, things like paving, we need to get some performance teams going on those. So it's really I think the key part of our business that changed in 2013 was we really said, okay, look, our job is to support the operating companies. You guys are the ones who make the money. And we sort of changed our approach, and it really, what a lot of big companies do is they sort of, their performance teams go out and tell people what to do. Our performance teams don't. Our performance teams, we look at it as a pull-through. We've gotten to the point now, especially on the aggregates and pricing side, where the local businesses are asking for that help. And that is so much more effective than, hey, we're from headquarters, we're here to help. So, it's a work in progress, and I think we're seeing a lot of those benefits, this year versus last. Our margins and our costs, so we've really done a good job. Next slide. Again, vertical integration. Before we hit a roadblock in 18, if you want to grow by acquisition, in my mind, and you want to grow consistently in acquisitions like we did in 13, 14, 15, 16, and 17, you need to be vertically integrated. We don't want to be an asphalt, paving, or ready mix by itself. We want to be in those businesses where we have really good, strong aggregates position. And the reason is if you have a really good aggregates position, it's harder for people to compete. It's harder for people to enter markets. Not that they can't, but it's just harder. So we feel, that the downstream and the paving and other businesses are much more are much more consistent, much more valuable when they're attached to a really good aggregates business. And when our share price was where it should be, up towards $30, we had good, solid organic growth, but we also matched, and organic growth means just the business out of your base, the businesses that you already own are growing at 4, 5, 6%. And then the inorganic growth is acquisitions. And we were growing 4, 5, 6% a year in acquisitions. And that really, the market really liked that. We can't duplicate Vulcan, Martin's positions that, they have these, 80-year-old quarries that surround Atlanta or, Raleigh, Durham, or, some of these places. You just can't replicate those. So they're going to grow a little faster organically than us, but, they can't do, I think one year we did 14 acquisitions. They can't do that. They're just not equipped to do it. They can't integrate them. We have, with Michael Beatty and our development team, we have the best development team in the industry by far, and we can do that. So, that's really our strategy. I think we're heading back there. It would be nice if this pandemic would end so we can get out and call on people again, but it will. And then I think the last slide I'm in. So what makes us different? I hope that the main thing is that makes us different is that, our focus on people. People are without a doubt the most important asset we have. And I love to see smart young people like y'all, interested in Summit. It's really the number one thing that makes us different. And then, the rest of this we've really talked about. We are disciplined from a capital allocation, and what capital allocation is, it's how much money you spend on CapEx, how much money you spend on acquisitions, and how much money you actually produce in the business. So it's I think it's a great company. I couldn't be more proud of it. I am, like I said earlier, I am especially proud of our performance in these difficult times in 2020. And, and again, that gets back down to people and respect for people. And, I think I think our protocols on, COVID-19 safety precautions, I hear from numerous companies that we have actually gotten business because customers like the protocols we have, in our businesses to minimize contact and to keep people safe. So, not only, most important thing is keeping people safe, but when your customers see it and you actually get extra business because of it, that shows that you're doing something right. So, be more than happy to take any questions from anyone, on any subject. I know it's when you're driving around in a car or whatever, it's hard to come up with a question, but anybody have anything? Okay, well, look.
Question, if possible.
Great. Sure.
You kind of talked about it briefly, but when you build a team around you, what kind of people do you look for? How do you go about finding them?
That's a good question. But I was fortunate enough. I think it would have been very difficult at Summit to build Summit without the ability to this will sound crude, but to take people from Oldcastle. At one point we had 80 people that migrated from Oldcastle to Summit, and because it's very difficult to go out and find people with headhunters and find people that you don't know. Your success rate is low. I think when I look at people, I think the number one thing I look at is I don't know how else to say it, but I just despise arrogance. And I sometimes in an interview in the first 3 minutes, if I see somebody who's arrogant, I shut down and I'm polite and get through the 45-minute interview, but I know that the person's not gonna work out. And obviously, look, experience, intelligence, all the things that you would look for in leaders, the leadership qualities, the ability to inspire people to to do difficult things is important. So I don't know if that really answers the question, but it's really you get to know people over a long period of time, and I was very, very fortunate to have the ability to bring in the Michael Brady's, the Philippes, the Vals, the Angelas, the Shane Evans, the Damian, who's no longer with it, but he was a great guy, Damian Murphy. They're just Melissa Bennett. They're Brendan Devereaux. They're all over the place, and I think it's really important that we had. I think it would have been difficult to do Summit without that ability. Anybody else?
We had a few submissions. Go ahead, Horatio.
Oh, I was just going to ask, what was his question? I kind of dropped from the call before he asked it.
Oh, what do you look for? What do you look for in
my
people?
question?
Sorry, go ahead. Go ahead.
No, you're fine. I was just going to. It was when you build a team around you, what do you look for, and how do you go about finding those people? Okay, thank you. And then I have a kind of piggyback question. What do you feel like? What sort of skills do you think before we enter the field? Obviously, we can learn so much in school, and experience and internships can take us so far. Like, what do you think we can do to better ourselves to be prepared for when we come on board, and if we come on board?
I think the ability to operate in a team and to be part of a team and to get along with people, it's all about look, you can go a certain distance just being a loner, but you really need to be able to, to operate in a team, to be part of a team. And, it's just about people skills. And I'll go back to the last question actually and add one last thing to it, which I think is, and again, it goes back to Don Gottson, the mentor I had. He always operated and, best ideas win. And what he wanted around him were people would tell him what they thought. And, there was no, this is a little crude, but, if anybody tried to kiss his ass, they'd get kicked in the face. It was all about best idea wins and having people around you who will speak their minds. And look, you can speak your mind and someone can go, no, that's crazy. That's a silly idea. We're not doing that. But that's okay. I mean, it's all about, if you have people around you, and that's the best part about a team is, if the team are all willing to speak their minds, not obnoxiously, and if you're said, hey, no, we're not doing that, you go, oh, okay, what are we going to do? It's a matter of I think that idea of best ideas win is a really important one, and I think the ability to work with people and the ability to express yourself, but not too much. Be succinct, be very pointed when you have an opinion. And if someone thinks, if your boss or whatever says, I don't think so, but thanks, then you move on and you go to the next issue. People skills are, that's what you really, doesn't matter how smart you are. If you can't get along with people and you can't be part of a team, you're going to be limited in your success. And as you get higher and higher in an organization and you start hiring people yourself, try to hire people smarter than you. That's really worked for me. And so I have a lot of them that are a lot smarter than me, and that's fine.
I gotcha. Thank you.
Sure.
Anyone else have a question? We had 2 pre-submitted questions as well.
I have a question.
Okay, good. Go ahead, Hannah.
That's all right.
Okay. Hannah?
What do you think personally, if you haven't said it already, is the hardest transition from like what you learn in school or what we're learning online here to the physical application, like in the workplace of what we're learning about?
I think I'll just get back to it's, when you're learning from books and, if you get some of it, you do some teamwork, but the hardest transition is, again, being part of a crew or being part of a team and, being able to work together and, having a common goal and working towards that. When I look back on like what I learned on the MBA side, when I went to school and I went into the real world, to be really blunt, there was very little of it that was directly applicable. There's some things, if you're looking at processes in an aggregate facility, or if you're looking at construction management and you're looking at, WIP, or you're looking at, there are some things that are very specific. But, it's really, I think what you learn in school is a thought process and a problem solving. And, when you get out in the field, that you're going to have the same thing. It's processes and how do I solve this problem? Okay, this crusher has got this issue, who do I go talk to? And that's another lesson I learned really early also. It's if you don't invent things, you got a problem, find somebody who already had that problem and take their advice. And I think that, that find good people to be around, find a mentor. And, you know, I think that also goes along. Find someone who's going to look out after you in an organization. I know so many of the people and so many of the places you guys are at, and you've got some fantastic folks there who truly care about their employees. And then, by the way, that's one thing I would also tell you is if, you know, and hopefully I won't do this at Summit, don't work for someone you don't respect. Go somewhere else. Transfer. Go to a different company. Because, you know, and I won't say who or where, but I did that for a few years, and it all turned out all right. But I knew he was a bad guy, and I stayed there, and I shouldn't have. So that's a lesson. You know, if you really think someone's a bad guy, run.
Thank you, Abby.
So if you talk a lot about mentorship and having mentors, do you have any advice for what to do if you lose your mentor, or if you need to develop a new mentor relationship or professional relationship with someone, and you don't really have a working relationship with them yet? How do you build that relationship?
I mean, I think the easiest, well, first off, you need to find somebody, and I never really did it formally. It just, I had a working relationship, and it it was something that I fostered, and I would call someone looking for advice. But I would say to you to seek someone out and say, even if they're a couple of levels above, say, hey, I was wondering, if you could help me. I'm really, trying to do the best job I can. If there's any advice you have, please feel free to do it. I mean, I think you can do the informal arrangements like that. I think, we've toyed with more formal, mentor relationships. I think that's something that we may try to do more of in the future. But, I think it's a matter of fostering relationships and ask. Say, hey, I'm really trying to build a career here, and I would love your help. And, I think that's again, that sort of comes across as someone volunteering. And like I said, I always love that idea. I've always loved volunteers.
Thank you.
Sure.
We have the only question that wasn't covered is what markets do you consider for growth for Summit? We know COVID, obviously, and the pandemic has halted that, but is there any interest in international business as well?
Well, we're an international business. We have a business in Vancouver. But, we looked at Oldcastle when I was at Oldcastle. We looked a lot in Mexico. We looked a fair bit in the Caribbean, which was always the one I was volunteering for. We looked a little bit in South America. But, I think there's enough room to grow in North America, in the US and Canada for the foreseeable future. One of the issues you have is, US and Canadian businesses are valued much more highly in the stock market than someone who has 30% of their business in Europe. We've been approached by a couple of European companies and one South American company about merging, and it's the right thing for them, but it's not the right thing for us because it would lower our valuation on the stock market because the South American businesses are looked on as risky, just politically and whatever, and then Europe is looked on as lower growth. So it's hard. Even if we wanted to, it's hard to do it without hurting your stock market valuation. So, I think for us, markets, there's still lots of markets in the US that I like. I like the Northwest. I like Ohio. I like Arizona. California and Florida are pretty much spoken for. I think I'm 0 for 25 years looking at businesses in California. I just never seem to be able to get a deal done there. Not that I don't want to either. That's just an area that I don't know. I think the real estate's worth more than the business, so it gets hard to do a deal. So it I still think we got lots of scope to grow here. I mean, we're getting up towards 500 million of EBITDA. I just, I would hope over the next, the next 5 years or whatever that we could get to 1 billion of EBITDA. So, there's still lots of businesses like Amanda's family's business that are, big and independent, and you just never know what happens with these businesses. And we have a list of, I think we have 400 businesses that we keep in touch with on at least a couple of times a year. And we're like I say, the best deals are the ones where you get a call from Henry Hinkle, or you get a call from Jason Kilgore, or you get a call from Ab Boxley saying, "Hey, we want to talk." And those things happen. We have not done very well in auctions. That's the other. There's usually what's the saying? There's always a bigger fool. We tend to not pay the price in an auction, and we have so many of the people that have joined with us have done it because they know that we'll look after the people and the business. And, they're not necessarily, they want a good price for their business, but they're not going to sell it to the wrong company for an extra 5% or 10% or whatever it is. And you tell that to people on Wall Street and they're going, "No, that can't be. Everybody wants the last dollar." Well, I can tell you the Robert Halls and the Ab Boxleys and the Jason Kilgores and the Hinkles and the Cornejos, yeah, they wanted a really fair price, but they also wanted, the business run well, that respected their employees. And, because in the end of the day, guess what? Their name's still on the side of the door, and they want it, run well. So that's a very important part of our strategy.
Thank you, Tom. You shared a lot personally and business-wise, so I know all the participants appreciated it and learned a lot today.
Sure. I'm hope, that's all I got. But you guys, you all best of luck, and hopefully I'll see you sometime in the future. And if there's anything I can do for you, just, Amanda has my email and whatever, be more than happy to see what I can do. So you all take care, and thank you for listening.
Thank you.
Okay, cheers.
Thank you.
Bye.
Thank you.
Thank you.